you doing, John? Welcome back to the tank.
Well, welcome back. You just got back as well.
I know. Welcome back to Canada, I guess. Everyone's been
Yes.
stuck all around the world because everything seems to be falling out of the sky, unfortunately. But luckily, we're both back in Snowmageddon here in Toronto, digging ourselves out of these igloos we live in. But you know what? I want to start off with something pretty big that I don't know if you expected this headline to come out, but BDC Capital is announcing a new $1 billion in fund commitments for growth stage investments of Canadian tech companies. They have now announced a $500 million growth venture fund for direct investments and co-investments, alongside a $450 million growth equity partners program for minority stake in equity investments in mid-market growth companies, something you obviously know a lot about. So for some of our listeners who don't know who BDC is, Business Development Canada Bank is a $6 billion AUM investor in VC asset classes. And they originally launched this growth venture fund in 2021, but is now expanding its focus, obviously. Past investments include Applyboard, Borrowell, and Verafin, and now obviously announcing a new investment of $30 million into Certain, the Victoria-based backed screening testing company, as well as StackAdapt's latest round that was announced the other week. So, John, with these new funds coming out of BDC, the one thing that people are questioning, including Mark McQueen from CIBC Innovation Banking, is saying, what about the early stage funding markets? Why are we still having growth stage funds being created by the government? What about securing capital for their early stage side of it? So what are your thoughts here?
I agree with Mark McQueen. The building of companies is a continuum from the early stage to the later stage. Once you get into the later stages, and let's just talk about the Canadian marketplace, when we are looking at minority private equity opportunities or mid-market, whatever you want to describe it, there's plenty of capital on both sides of the border, and it's a competitive process already. And so I don't hear a lack of capital. Of course, it's never perfect, but at the earliest stages is where, if we don't protect the capital in the earliest stages, there's not going to be any late stage opportunities for us to finance. That's number one. Number two, this is the part that really surprises me. There was always conflict between what does BDC do versus EDC. And what they sort of decided about 5-ish years ago is that BDC decided to focus in on the earlier stages and EDC went on to the growth stages. And and I thought that was a good way to differentiate. Well, now what is this all about? And so I do worry that the real lifeblood is at that earliest stage, and I am very concerned. Stay in the zone that you're best at, and if you're not putting the capital where the idea behind BDC is put capital in on the riskiest opportunities where the private sector has a challenge because of the valley of death risk profile. That's where they should be. That's where our taxpayer dollars should be really focused in on.
It feels like they're moving kind of with the market, whereas what you're saying is maybe they're not looking at the market in terms of what's happening at the ground floor where they should be focusing and where maybe the lesser riskier part of the market is focusing. There's only been, I think, since in 2024, there's only 5 VC funds that have raised $500 million collectively, lowest since 2014. They had their seed venture fund program of $50 million. But, they also had that early direct and indirect portfolio that they marked down $220 million, which is now valued just about $3 billion. But I agree with you, John. It's sort of a struggle right now in the early stage market. BDC has obviously been a great partner of ours through the Vicky allocation that we received. But there definitely still is a gap in that C to Series A market. And this kind of dovetails into the other report that came out, which was the Canadian VC funding report from the CVCA, right? So they said that the Canadian venture capital market saw $7.86 billion invested across 592 deals in 2024, a 10% increase over 23, which we know was a pretty quiet year. But a lot of that was driven by later stage mega deals, right? So mega deals are 50,
for example.
Yeah, Clio, right? $1.24 billion Series F deal. That's a mega deals in Canada are 50 million plus, which made up 62% of the total VC dollars invested. Seed stage, where we focus, or even earlier, fell 50%. raising just $510 million. So you had the Clios, $1.24 billion Series F, Cohere, $616 million Series D, Blockstream, which is in crypto, $289 million convertible note,
right?
And then Wobby's $275 million Series B. And that's sort of the breakdown of the mega tech deals. I guess, what are your thoughts?
Well, two major thoughts. If you really want to do proper data, don't do averages, do medians.
Agreed.
And you will see a massive dislocation between the average and the median, number one. Number two, those companies may be Canadian companies, but look who the funders are. It's almost 100% foreign capital, and it's U.S. capital in particular. Go back to your previous point of where is the issue? It's our domestic capital, and it's not on the growth side. On the growth side, if there is great companies, and all those you mentioned are great companies, capital will find itself. But on the very early stage, foreign-based capital, it's very, very difficult to find these opportunities because it's such a localized business.
Yeah, it's also important to have a Canadian investor like us, what we find, kind of putting our flag behind a company and then getting also U.S. investors to join faster.
Absolutely.
32% of all Canadian VC deals had U.S. investor participation, and Clio's round had all U.S. investors.
Correct.
So that's the other thing that people need to know. And the other thing that was interesting, there was not one Canadian IPO listing in 2024 on the tech side. So that was really interesting. I don't know if biotech was removed from that. But, does Canada's sort of over-reliance on mega deals, John, and the U.S. investors putting up capital across the startup ecosystem kind of open up a risk for the long-term viability, you think?
I have to dust off all of my materials between 2005 and 2010, and history is repeating itself. The issue that people were always saying, oh, don't worry, we don't need a domestic venture capital system really, because good deals always find the money across borders. And I keep on saying, no, that's not true.
Mm-hmm.
It is true as you get into later and later stage. Anchoring it with Canadian sources of domestic capital. We don't have to supply 100% of it, but the perfect investments, and frankly, all of our investments here at Mavericks, we're not big party round sort of folks, but virtually every one of our investments has us as the Canadian anchor, and there's a U.S. anchor because these are very Canadian U.S. sort of businesses, etc. And we work in great partnerships, and we have different networks. That works very well, but it doesn't work as well when you have 100% Canadian or way worse, 100% American.
Yeah, absolutely. I mean, that's the best thing you can do is have these kind of partnership rounds where you have a Canadian company, let's say that it starts, but then 60 or 70% of their revenue starts coming from the US because that's where the larger market is. And then you need to have US investors who have the partnerships and corporate development relationships being opened up. We need to have more of that here. Maybe it's coming from corporates. Maybe it's coming from the pension stories that we hear happening, but we'll have to wait and see here, John. Switching gears a little bit on a very interesting headline, would love to get your take on this, is this high-speed rail from Quebec City to Toronto, and ready for the tagline number, costing between 60 to 90 billion. Now, so many questions are going to be brought up around this. I mean, we can't even get metro links opened. So how are they going to build a high-speed rail while China has hundreds of them? But basically, the consortium that announced this at a press conference has said that they have allocated $3.9 billion for a 5-year planned phase covering design, consultations, and financial modeling before they put any shovels in the ground. Construction won't even begin for at least 5 years, with each segment taking 5 to 7 years to build. John, I will pause there and let you talk about that before we get into the route dynamics and all the infrastructure needs requiring this.
So, I mean, where do I start on this? So, first of all, the timing. Wow. During just about when we're going to have an election. Is that coincidental? Wow. That's just amazing.
Rogue Parliament has announced the biggest deal of their lifetime.
Yeah, it's amazing. And by the way, and where is this money all coming from? Is it from, our excessive spending that we had over 50% misfire? Are we just going to borrow endlessly and just bankrupt the country beyond its already bankrupted nature? Like, where is the money coming from? Now, I was involved when I was at OMERS in an opportunity with Via Rail and the Canadian government. And we were, again, look, this thing's been going on for I don't know how long. And they came to OMERS to ask, would we be interested in participating? And I said, you know what? It would. And I brought the infrastructure folks. And then we said, yes, this is interesting, but the math has to math here. And when you look at the density of the corridor, the truth of the matter is the math doesn't work, at least today. Now, what happens is there are situations here, and again, we didn't get down that far, where just like the subway systems, then the density starts to create a magnet and communities start to build around where the lines are, and maybe you start getting the right densification. However, from an investor perspective, there needs to be guarantees of ridership, say, for the first 10 years. In the case of what we were looking at, we said if you could provide the guarantees, so once that density occurs, and let's just say it's 10 years or whatever it is, there was a flat no at the time saying we're not going to do that. And we said, okay, well, then we're not going to invest pension fund money in a money losing opportunity. And so my question really on here is this even financially viable? Because it wasn't before. I don't know. And is this going to be another one of those boondoggles? And frankly, if you said of all of the things that our country is going to be suffering from, where this ranked on our priority scale, where we have opportunities in the Arctic, our border, etc., like this is the sort of populist nonsense that I just cannot believe. And if we actually had a proper balance sheet in this country, I would be less negative about this. But for God's sakes, what problem are you really trying to solve here?
The math does not make sense. While you have the U.S. going through a Dodge exercise, we have an anti-Doge exercise in something like this. It was $60 billion to $90 billion. They're spending $4 billion just on consultations and design. Why not give $1 billion to have the entire country covered in 5G satellites for entire coverage of the entire country for everyone to get online and actually create wealth for themselves, okay? This is benefiting 4 cities. Toronto, Montreal, right now, 5.5 hours, going to go to 3 hours and 7 minutes. Montreal to Ottawa, 2 hours down to 1 hour. Toronto to Ottawa, 4.5 hours down to just over 2 hours. I mean, we're talking about an hour here and there. Then you have to talk about all the different decisions that they're making on these stops. So obviously there was a great thread online with Dr. Mike Moffat talking about the route selection. You've got cities that are way smaller getting potential stops here, like Laval versus Peel region, like Mississauga or Brampton. These are just things that just don't make sense. How are you bypassing Hamilton?
Yeah.
Right? Or London. They are using a GBA plus, gender-based analysis plus study on the demographics of the cities versus just pure population growth.
Yeah. I mean, the only thing I could ascribe this to is let's see what happens after the election.
Okay, well, let's see what happens. But there's something that's been stirring in the AI space for some time in the US with the New York Times and OpenAI. Well, it looks like that lawsuit and something similar has made its way up into our neck of the woods in Canada, where major media companies are suing AI startup Cohere for copyright infringement. Now, the coalition of major media companies, including The Atlantic, Condé Nast, Forbes, The Guardian, Politico, Vox, and the Toronto Star, have basically filed a copyright and trademark infringement lawsuit against Cohere in New York. So the Southern District of New York is where the case has been filed, basically claiming that Cohere has scraped and used their content without permission to train its AI models, and in some cases displayed full or partial copies of the entire articles. They're seeking up to $150,000 per work infringed. And the court order blocking Cohere from using copyrighted content for AI training is basically what's happening here. John, where do you want to take this one?
Should we go to the Wayback Machine where you and I had talked at length on how the hell are these folks getting around copyright? I'm wondering why it's just taken so long. I still don't understand legally what the defensibility is when you're utilizing copyrighted information and you're making money off of it. I get what they're saying. Well, you're not grabbing the exact words and stuff. Well, I'm not so sure that that's what gets you around the situation. I think what's going to happen is there's going to be, and there has to be, if there's creators of content, they're going to have to get compensated somehow. And there's going to be all of these deals. And maybe there's, at the end of the day, there should be, I know, a pile of money by every LLM that scrapes it off, has to pay into a pot. And somebody is just like, the record industry, and they give the money out. But the question again, and I think you and I had chatted, the economics of these businesses are continuing to come under more and more fire, that they haven't been fully costed out of what the cost is to operate some of these businesses. And I think they're all going to be under attack. And, again, I am no legal expert at all, but I am, quizzing myself. Why can they actually do this?
Yeah, I think if you have to put a pool of money aside for litigation and legal debates, your business model obviously becomes pretty constrained. But it's interesting that Cohere dismissed the lawsuit as misguided and frivolous, which obviously their lawyers told them to say. But they were arguing that it has always prioritized responsible AI training and respecting IP rights. And this is obviously in conjunction with the New York Times lawsuit against OpenAI, which I think will be the biggest payout ever and probably set the precedent for a misuse of content. But then you've got the Anthropic settling lawsuit with the music publishers over song lyrics. Meta lost a copyright battle over a group of authors. We're going to see this happen. Thomson Reuters won a lawsuit against the legal tech company Ross Intelligence recently as well. So we're seeing all these lawsuits kind of bubbling up. I think once the New York Times and OpenAI one is figured out, that's probably going to set the precedent. But do you think this kind of poses a risk with Cohere's role as like one of the top AI startups globally, as well as the top, AI startup, obviously in the Canadian AI ecosystem? Do you think this poses a threat though, in terms of like potential capital coming into this ecosystem, or is this like a one-off?
Well, I think what Cohere's response has been is that they're not really trying to be this broad-based LLM like an OpenAI. They're focusing on the retrieval side of the RAG business, far more helping enterprises with their own private data, etc. So I'm not exactly sure the direction, but that's what was implied by the commentary. However, I do wonder from an investor perspective, if you are remaining in the public LLM business as investors, unless you're one of the big 2 or 3, my guess is investors are going to be more and more concerned. They're concerned with compute costs. They're where the training information is going to come from in about a year from now or thereabouts. Now you have the lawsuits from the IP infringement getting louder. So I do wonder if it's going to push the concern over the economics of these businesses.
Yeah, it definitely feels like it. I mean, last but not least, the tariff man is still around. What are your thoughts here? Is the market calling Trump's bluff a reality, John? Or do you think we're going to have individual agreements with the provinces? What do you think is going to happen?
Well, yeah, this is very complicated, but step number 1, so if I'm giving advice to Canada, is you could focus in on only the things that you can control. So our own house in order, the provincial, the interprovincial trade, and all of those issues that have been blasted by a number of folks. Get that stuff in order and work on it now. We can't control what's going on in the White House. I have to say that if you have ever listened to the latest podcast interviewing Peter Navarro, who seems to be the inspiration for some of these tariffs, it is troubling the viewpoint that they have, why they believe in the tariffs. And it really seems to be an experiment going back to the pre-1914 years of where all revenues were largely done through tariffs and tariffs, and there was no income taxes. And you start to understand the logic that they're using. Now, the logic seems very flawed. And in fact, when you hear the podcast and you hear the interviewer saying, isn't this what's supposed to happen if you do these tariffs and you get no. Something else is going to happen. There's going to be a lowering of prices. And really what it is a shift of Canadian business profits that are earned in Canada is going to shift across the U.S. border, which in fact decreases the prices so that when you include the tariffs, you're still at a flat rate. It's an interesting theory. I'm not sure that's been done before, but when I listened to that, it made it pretty clear to me, at least for the next 4 years, these tariffs aren't going away. So people better get used to it. And that's why I say, fix our own house. And when I hear these $90 billion investments of rail, is, oh my God, folks, we are going such the wrong way.
Yeah. Last but not least, John, interesting take in the U.S. Trump's administration has shut down the Consumer Financial Protection Bureau, CFPB, basically removing key regulated hurdles for fintechs to go potentially public. Chime and Klarna are going to benefit from this, obviously.
Yep.
But, there's another interesting thing that the Conservatives in Canada recently discussed, where they said that they will go huge on open banking if they win power, according to the logic Laura Osman wrote the other day.
Yes.
What are your thoughts on this? Do you think we're moving faster to an open banking world in the U.S. and in Canada? Obviously, the U.S. being more open than us.
Yeah, I mean, in Canada, we have this has been 6 years of promises in the making. So when the Conservatives made the comment about we're embracing it, the Liberals said the same damn thing, and
still waiting to see it.
I hope it. When I've spoken to a couple of bank CEOs on this, and I just said, do you not see the benefit of open banking? And the comment, actually, the interest in the comment was, yeah, because at the end of the day, the banks have capital advantages and trust advantages, right? And they have scale, right? And so this is what's good for all the consumers in Canada will actually make our Canadian banking system even stronger and could withstand competition from the United States. One of the things that Trump is mentioning is, we don't like the fact that we have blocks of coming into Canada, whether you're in telecommunications or banking system. So better get prepared to become far more resilient, because you never know what's going to happen.
Oligopolies are not very good for creating innovation
and
competition. Exactly. Until next time, John, thanks for joining us in the tank.
Thank you.